On today's episode, we have one of my mates, Dylan. Today, we talk about the current financial state of the world. We go into a little bit stocks, taking financial responsibility. But yeah, so this is my first actual Zoom podcast. So let's see how this goes. Let me know what you think of it. I hope you guys enjoy. Go. Alrighty, man. Guess we'll start off with because you messaged me about this. Taking financial responsibility. We'll go straight into that side of things if you want to kind of explain that or your take onto it, especially with the current situation.
Probably introduce myself first.
Yeah, go for that one, whatever.
Yeah. Well, I kind of wanted to message you a little bit and speak about sort of finances. I mean, especially things that's going on and where we are in the world at the moment. I guess, are you asking what financial responsibility means to me?
Just your take on it.
Yeah. I'm not really sure. I think being financially responsible, the most important thing is spending less than what you earn. I think a lot of the times in the society we live in, we're encouraged by consumerism to basically just spend our whole pay as we get it on whatever we desire at the moment. But I think taking financial responsibility is about putting away for the future. It's about knowing the meaning of sacrifice when it comes to money, because a lot of people don't. And unfortunately, when it gets to emergencies like this, people don't have anything left over. So I think for me, that's the first thing about being financially responsible, putting away an emergency fund. I mean, if anyone's ever listened to Dave Ramsey, it's the first thing he says, chuck away an emergency fund, 6 months expenses, and have that ready to go. But I mean, it's different for everyone because everyone's in different circumstances when it comes to finances. Like it's very easy for, someone like you or I to sit here and be like, you should save money from your pay. But, you speak to a single mother who's got to fund a family, who's not getting any payments from their husband and, working a full-time job with minimal government benefits. How is that woman supposed to save money? So it's a very individual question, financial responsibility, but I guess the base of it just seriously comes down to spending less than what you earn.
Yeah, I definitely agree because I just notice myself even too taking a half-ass approach to being financially responsible. Like at this point in time, I would say I have enough money to cover myself for a couple of months or whatever, but I don't have enough money to help out others around me. And that's guess more my take on financial responsibilities, be able to help everyone in the household, not just yourself.
Yeah, exactly. Being able to, be supportive financially to the people around you, the people you love. It's true.
Yeah, so I guess what kind of got you interested in the whole finance scene and investing in stocks and that?
Well, I remember when I always had this view that I didn't want to work for the rest of my life and live paycheck to paycheck and, live that 9-to-5 life, basically. When I started really in high school, because I've sort of seen, my family and people around me and friends who do live that sort of lifestyle, and I kind of never wanted to live it. I only really started taking finances seriously when I was 20. I mean, I was a dumb 18-year-old. I think we all were at that age. I think you're the exception to the rule if you're financially responsible at 18 when you've just got a license to go out to the valley.
Yeah, pretty much. I think even 20s being lucky enough to be fine, fully in the financial responsibility bit.
A lot of people don't learn about money ever. Because it's not really taught in high school, but I guess what's got me started was Reddit, really. I don't know if you've ever used Reddit before.
No, I've heard of it. I haven't used it yet, though.
Yeah, it's like a social media platform, basically, where you have a bunch of subreddits about certain topics. And I started reading personal finance subreddits and stuff like that. And it just got me interested in the topic because it basically painted a life where you could retire early. And, if you took all these sacrifices when you were younger. And I guess that piqued my interest a lot. Got me into stocks and then investing, and it's a pretty broad topic. Finances, there's a lot of it. There's investing, there's saving, there's a billion other things that's important. But I started reading books about the topic, like The Intelligent Investor. I think you've read that book.
Yeah, I got halfway through that one.
Yeah,
then I kind of it.
He's a pretty boring writer. Let's put it that way. It's not exactly the most exciting book.
It's pretty repetitive, I guess, because I was listening to an audiobook and I'm this is just getting way too repetitive, especially for a 14-hour book. But it does have good
points in it.
Yeah, like and that sort of stuff. And I guess I actually started my investing journey on my like 21st birthday. I bought Telstra shares. Those were like my first shares that I ever bought when they tanked down to like $2.70, and I think I bought like a couple of $1,000 of Telstra shares, and then I've been buying individual stocks up until probably August last year. And then in August last year, I sort of figured the market was a little overvalued. It went kind of a little bonkers prior to December, and then I've stopped investing and just been hoarding money basically. And I guess it's kind of ended up being a good thing with everything that's going on. I mean, that's how I got started.
Yeah, because
my story, it's like I've always been interested in the business side of things, but it wasn't until I read Rich Dad Poor Dad I actually decided to do the finance stuff. And then I started looking into crypto, and then I was like read into that, and I realized there's not a lot of money in that, or like it's very hard to make a profit in there. Then I looked at investing, and I kind of still stick with that now, and then got into Forex trading.
What's your take on cryptocurrency, actually? That's a pretty interesting topic.
I know a lot of people. Yeah.
Me and Ashley have spoken about it. We're talking about it on Facebook, actually. And I don't know, I reckon this current time it might go up, especially with hyperinflation and all the debt kind of like the countries are pouring into the system and that. So I think it might go up in price over the next 6 months, but I think it'll probably take a dip.
I mean, short of predictions, I mean, what do you think about the concept of Bitcoin or any other cryptocurrency? The fact that it's a decentralized sort of currency that's not controlled by any government. I think, what's your take on it as a medium of exchange, like using it as money? Do you think it's ever going to become like the point where you could go down to Kmart and buy something with a Bitcoin?
No, I generally don't think so, because especially with having like no restrictions behind it, and a lot of government policies don't want anything like that. Because it's very hard to have control over, I guess.
Yeah. Well, the ATO is struggling to tax it at the moment. They're spending I think they sent out like $350,000 letters, 350,000 letters to people who reminding them to report it on their tax return and stuff. Because people, obviously, they're just not reporting any like crypto gains on their tax returns. A lot of those people who make like shitloads of money from Bitcoin and all the other cryptocurrencies.
But I guess how would you? I guess how would you report that to tax though? Like, because it varies.
It's just a capital gain.
Yeah.
It's just so you've just got to, when you do your tax return, like on any stock or anything like that, you've got to report the price you bought it at, and then you've got to report the price you sell it at. And then the ATO will view like that difference between the purchase price and the sale price as your capital gain. And then that's counted as like personal income. So that's how they meant to calculate it. But people just like subvert the system basically. And so the ATO is going crazy about it. But yeah. And how'd you get into Forex trading? Like I've never even tried to trade Forex.
Funny enough, because when I was looking into investing, I kind of just picked up a book. This was Forex Trading. And then I didn't really think anything of it. And I jumped into a couple, I was reading the book kind of as you're going, having no idea what it was kind of thing. And then jumped onto a couple of YouTube videos that started talking about it. And since they said it was the biggest market, trading market in the world, it's like, let's jump into it.
Yeah, I'm a bit scared to do any form of currency like Bitcoin or crypto or Forex or anything like that. But
well, trading's a game.
With it?
When I was properly doing it, I wasn't going too bad. I was breaking even, which that's pretty good for especially someone in their first year. But then I lost a fair bit, and then I kind of drifted away from it, and then started on to that's when I started on this business and doing the podcast kind of stuff.
Yeah, it's pretty scary investment, any form of currency, because you got to be really good in order to trade currencies. But
also too, you got to be very focused, and you have to have a lot of dedication and time, because some people could take. Some people can do it in 2 years if you're lucky enough, and then other people could take 4, 5, 10 years before you become profitable. So, sure. What would your take, I guess, be on it? Even though you haven't really invested it or traded it, what's your take on it?
On currency trading?
Yeah.
I would never do it because there's no underlying asset. So like when you invest in a bit, like anything, you got to think about what an asset actually is. And I think a lot of people like misconceive the notion of an asset. Like a lot of people will be like, hey, I've got a car. That's an asset, right? I'd argue it's not an asset. It's a liability. Assets produce money. Assets produce something that's worthwhile. I mean, I guess a car is an asset in the sense that it gets you to work, or some people use their car for work. But for a lot of people, cars are money pit. Like, you know what I mean? Like you spend it on gas, maintenance, everything like that. I wouldn't invest in any form of currency. And I'm not saying it's wrong to, because a lot of people made a shitload of money off investing in currencies and crypto and everything like that. My issue with it is that you're not investing anything tangible that's producing something. So for example, if I bought Telstra shares, which I do own, you know, there's a business that supports it, that generates income, and it's going to continue to generate income into the future. Whereas a US dollar is just going to sit there twiddling its thumb, earning the bullshit interest rate that the Fed's got, which is like 2%. Like if you're holding like Australian dollars, for example, our interest rate is 0.25%. Like the best interest rate you can get on any savings is like 1.9%. You're making 1.9% on your money. Whereas if you invest in a business that's growing at like 20% a year, you're making 20% returns over and over and over and over again. And it can continue that into the future. You get businesses like Amazon, which have gone from like 60 cents a share to $2,000 a share at their peak. And that's why I've always been like heavily focused into equity markets, because there's some underlying business that supports it that's going to continue growing if you pick the right businesses. Same with property. Property is a good one because you have tenants in the property. Not only is the asset going to sit there and grow because the demand for property is going to continue to increase, but you've also got someone living in your home paying you, you know, every single week in order to live there. So I'm a very like tangible sort of like, you have to invest in something that's there sort of person. That's another reason I won't invest in businesses that are highly valued, that have huge price to earnings multiples, because they're not investing in the current business. You're investing in what everyone thinks the future of the business is going to be like. A great example is Afterpay. Afterpay is not even profitable, but you know, it's worth hundreds of millions of dollars. Uber, when it launched in its IPO, launched at a market cap of like $46 billion, and that company loses about $2 billion a quarter. What are you investing in? Something that sieves money into the floor? Because that's what it is.
Yeah, because most people don't look at that kind of side, like especially with the earnings per share and all that kind of stuff. They kind of miss out on that. They just kind of like see, you know, say for Uber, for example, a big company, and you know, you just chuck the money in there, you kind of pray to God it all works out.
Yeah, well, Uber was like one of the biggest investments for millennials last year. Like it's something, because we invest in what we know. We use Uber all the time to go to the valley, to go to mate's house when we're pissed. You know what I mean? Like everyone uses Uber, but a lot of people don't actually like delve into the actual thing that they're investing in. And I think if you're going to invest in like something at all, like if you're going to put money into it, you need to understand what it is. You need to understand the business. You need to understand what you're investing in. And if you don't, then just put your money in an ETF.
Yeah, that's definitely true. Definitely agree with that.
I guess what type of shares do you generally invest in, or that kind of fancy you? Do you have a particular time, or do you kind of just go with whatever looks best?
I usually invest in companies that have the market cap is equivalent to their book value. And what I mean by that is Benjamin Graham, when he wrote The Intelligent Investor in Security Analysis, he spoke about having what's called a margin of safety. And the margin of safety is basically like, no one can pick exactly when when a stock's overvalued, undervalued. Anyone that tells you that they're like fantastic at picking exactly how much a stock is valued is talking out their ass. They have no idea what they're talking about. At the end of the day, like if you've got to invest in businesses that are safe, that you know you're going to get a return on, because otherwise it's not investing, it's speculating. What I invest in is companies that the value of the things on their books, so like the tangible things they have, cash, short-term assets, everything like that. I invest in those that have a market cap that's basically equivalent to that. So if the company was to liquidate tomorrow, I would still get my money back, versus where you invest in like companies that have crazy valuations based on these, you know, thinking what their revenue is going to be like. If the company went broke, then you'd lose all your money. But then I do invest in some companies that, like, for example, Facebook is one that doesn't really fit that mold, but I still bought into it because, I mean, everyone uses Facebook. I don't think it's ever going to go away. So
No, because Facebook definitely has the marketplace or the ownership of the marketplace. Pretty much any new social media account, comes out,
there's no competition.
They buy it all straight off the bat, or say if they can't buy it, if you pretty much copy all your algorithms anyway.
Yeah. Well, literally, like Facebook just ripped Snapchat. Like, do you remember when Snapchat came out with stories and Facebook just like ripped it off them? That's what Zuckerberg does. He's a genius. He just steals everyone else's work and doesn't get punished for it, really. I mean, But I mean, that's the sort of thing I invest in, just things with like tangible value that, they're not going to be like the crazy companies like Afterpay, for example, on the Australian market that are just like the hot things of the day. I invest in like boring shit like AGL, Telstra, like just the boring companies that are going to end up making money in the future.
Yeah.
What about you? Have you bought any stocks?
Yeah, I'm more buying what I have at the moment. I've sold majority of them at this point in time, so I could probably reinvest in the next couple of months. So I did have Facebook stocks, I have Amazon. I actually bought a couple of weed stocks, especially in America with the US market. But that's kind of a risk in itself because a lot of them are startup, and then the federal laws are different to the state laws and all that kind of, stuff. But generally they're pretty cheap, so they're probably good, like startup kind of thing to look at because majority of them should grow in the long term. And then also too, I have an index fund, which that pretty much is, so that just takes the, say a couple of bucks out each week and invest it in the top 100 companies in the world. So it's like just a high interest savings account.
Is that through Raise or?
No, it's Spaceship.
Oh yeah, I used to have Spaceship. Yeah.
Yeah, because I do want to look into what's the top company called? It's on the tip of my tongue. Can't remember, but I want to get into another company, but that's at least a couple like tens of thousands of dollars worth to get an index fund. I think Vanguard. That's it.
Oh yeah. I've been looking at Vanguard. Yeah.
Yeah, I do eventually.
So what's your take on ETFs then? Do you prefer them over like individual stocks or?
At this current time, because you don't have to do a lot of research into them.
Yeah, that's the best part about them.
Yeah.
And like Jack Bogle wrote a book. I'm not sure if you've read it. A little book on common sense investing. Have you ever read that?
No, I haven't.
No. So he's the guy who started Vanguard. And he wrote this book on ETFs and why they're basically better than picking stocks. He basically said that anyone who tries to pick stocks is going to end up losing money in the long run. Your best bet is just to go straight into an ETF. Don't do any of the research. Just let your money sit there and just grow over time. So he thought that ETFs were way better. I mean, he might have had a vested interest in saying that since he owned Vanguard, but
Well, I've read a book called
I'll Teach You to Be Rich, and then there's Barefoot Investor too that all said the same thing. Like if you don't want to do, I guess, take that massive risk index funds or wherever you're saying, probably the best bet to go. Because then you can kind of pick what kind of stocks you want to invest into. Like for me, for example, I invest into the top 100 companies in the world, or you can say invest into, the Australian stock market or, tech, and all the rest of it, blue collar.
Yeah. Yeah, I reckon ETFs are probably the best way to go for most people because I mean, picking stocks is basically a full-time job.
Yeah.
At the end of the day, like reading through companies' reports, like some of these companies post like 100-page reports. It's a lot to actually read them or compare them to other companies that are similar. So at the end of the day, I think ETFs are probably the best way to go for most people. Just put the money in there, dollar cost average in, put whatever you can afford basically into it at a consistent pace.
But you think of it too. Think of it too. It's a lot cheaper than putting your money in the super accounts or putting extra couple of bucks a week into your super account because you don't have to pay all the fees that super charges you too. When you look into that.
Well, you still pay super. It depends on your super fund, really. Like some super funds don't charge much fees at all.
Yeah.
They just charge a percentage of your invested capital. That's the way that the super structure usually works. And then they charge you for insurance. But I think the government like outlawed a lot of that automatic insurance policies that came with superannuation funds. I think the biggest benefit for super is tax, because like people that are on a really high tax bracket, they're better off putting their money in a super fund rather than investing in an ETF, because super's taxed at like 15, I think it's 15 cents on the dollar. And then like if you're in the top tax bracket, you're paying 49 cents on the dollar. So when you put money into your super fund, you're automatically making a 30% return on your capital. So
yeah, that's probably like, the better way to go.
Yeah, you get it back on your tax return basically. But that's if you make like voluntary contributions, and not many people do.
Yeah.
I mean, do you make voluntary super contributions?
I've always thought about doing. It's always been in the back of my mind, but it's not something that I've wanted to do.
Yeah, I don't think many people our age even think about super. Let's be real.
No.
I remember I was reading something on Facebook. Someone made a status and they were like, "Why is my super going down? The government's taking money out."
Yeah.
I was like, "Oh my god!" No.
I know. It's like, actually,
while we're on the topic of that, because I've seen so many of these types of statuses, and it's like people are so, I guess, financially uneducated of how the system actually works. To see so many things, especially with this like bailout or whatever, is like where they're always like, where is this money coming from, and blah blah
blah blah blah.
Where does the money come from?
Yeah, it's just printed out thin air. It's kind of a debt thing.
Yeah, they just buy bonds. They just issue bonds.
Because I was watching there's actually like plenty of YouTube videos you can actually watch that explains it pretty. The way they explain it on there is say like the central bank prints it off to the government add to their the interest rate they're at, and that's what the government borrows it at, and then the government filters through the banks, and the banks filter it through to us, and then we pay all that debt back with our tax money.
We definitely do pay it back via tax money. I mean, what the government does is they issue bonds. So like the central bank will basically like do like a credit raise. They'll be like, hey, we want like, $130 billion to support this JobKeeper payment. So what they do is they construct something called a bond, which is effectively like a loan over a certain period of time at a certain interest rate. And then they'll be like, who wants to buy our bonds? And then, you'll have foreign investors, people in superannuation funds, they'll buy those bonds. And that will give the money cash, like that will give the government cash straight up. Like, it's similar to getting a mortgage. Like, you'll get that money up front and then the government will pay it back like over 30, 40 years or whatever. So what we're doing with, with all the stimulus that we're seeing the government do at the moment, they're just issuing debt that will end up, but that we'll end up having to pay back in future generations. But the government's always done that. I don't think it's like some big conspiracy or anything like that. Like in the 90s, like the government printed fucking, hundreds of millions of dollars, even though it's less than what they're doing today on an inflation basis. The stimulus is pretty similar. Our government's never really run much of a surplus. We're similar to America. We love debt. We just get more and more in debt every single time. I mean, with interest rates as low as they are, we're not actually suffering too much from it. But it's going to be interesting to see if we can maintain our credit rating and people would still be willing to buy our bonds in the future, because we're going to have a lot of debt after everything that's going on. And I think most countries will.
Yes, that's because I also...
They're looking, special central banks are looking at trying to cut interest, what's it called? Interest on bonds to developing countries and that. Or interest on their debt.
I should
say. What do you mean? Like they were going to cut the interest rate for foreign debt?
So say with third world country or developing countries, they're looking at, so their central banks are looking at, so they didn't have to pay the current situation, didn't have to pay back their debt with interest. Or like the government.
Oh yeah, so they're defaulting on their bonds. Yeah.
Yeah, pretty much.
Yeah. That's what they want to do, yeah. Well, I mean, Venezuela has been doing that. Like, they're defaulting on a lot of their debts, and I mean, I think we'll see a lot of developing nations default on their foreign debt, which is a disaster, really.
With the current situation, do you reckon the financial system will collapse, or do you reckon a rebound?
Well, I think we'll see probably a lot of suffering in the future. Because what we're seeing at the moment is the retail industry, hospitality industry, the tourism industry has shut down completely, which means there's a lot of money that's all of a sudden not going into the economy. And when you think about that on a global scale, like there's a lot more industries than just the ones I mentioned that are being shut down. What we haven't seen is the medium-term effects. So the medium-term effects are all those bills that aren't being paid right now they're not going away. No one's going to waive those bills. Interest on mortgages is not going away. The banks have put a hold on repayments, but they're still charging interest, and people are going to have to make up that money. What we'll see is in the next 6 months, we'll see a lot of people struggling financially, and I don't think that's going to lead to a collapse of the economic system, and we're not going to have anarchy, and we're not. But we're going to see struggling. Like I think people in our generation have never seen a crisis. Like how old were you when the GFC happened? Like 12?
Yes, probably younger than that.
Like I mean, we saw the GFC, but Australia really wasn't badly hit by it, and we were too young to even understand it. So I think a lot of like a millennial, or not millennials, but I don't even know what our generation is.
I think we're Generation Z.
Okay, we're GZ. So I mean, I think a lot of us have never really seen like true suffering when it comes to this sort of stuff. So I think it'll be a big wake up call for everyone. But I don't think we're going to see like anarchy. I think we might see, it'll take a couple of years to recover, but it always does recover at the end of the day. It's just we got to ride it out, and we've got to do it together. I think we need to pull together a lot of the community and everything like that. We can't let it, what's going on drive everyone apart, basically, which does happen when stress comes into things, because when people get stressed, they do pretty shitty things. Crime goes up, suicides go up. I think it'll be a challenging time going forward, but I think we'll recover. What about you?
Yeah, I definitely agree, man. You pretty much said what I was going to say. I do think it's going to bounce back. I don't see a collapse ever happening or like anytime soon.
Yeah, I mean, short of global warming ruining the environment and us not being able to habit Earth anymore, I think the economy is still going to run. But
it's never going to be. But
yeah, bro, I'll probably wrap it up on this question, man. What would your tips be to financially prepare yourself for the future or for the next coming events like this or something similar?
Just save up an emergency fund. I know it's probably hard for a lot of people, but just live like you're poor, because most people are. I think that's really the message. Like, I get it's nice to like be able to go out and do things all the time and go on holidays and take up debt to be able to buy the next best thing. But at the end of the day, like, you got to set yourself up for when stuff like this happens, and just calm down a little bit and save money. But I mean, at the end of the day, you got to enjoy life too. So it's about finding that balance between like saving money and being financially responsible, and then also having fun.
Yeah, I definitely agree with that. I guess at this point in time, with what's happening in the world, will teach everyone how little money you actually do need to live.
I think so.
But yeah, all right, man. Cheers for that, man.
All right, cheers, man.
See ya.
Hope you enjoyed today's episode, guys. Make sure you share it with your friends. Tell us what you think. Give it a thumbs up, subscribe, and all that jazz. All right, cheers.